I don't think Talen's going to be a publicly traded company within 6 to 18 months. I honestly, Talen is probably the single best idea I've had in the last 5 years. And this might be the best buying opportunity to buy the stock that I've had since I've had the idea.
We are all about giving you access to stock ideas here at BBAE. And today I have a repeat guest, Enrique Abeyta, founder of HX Research and giver of a previously very interesting idea, which was call options on NVIDIA stock about a month ago. Enrique is back today, this time with an energy play. So Enrique, welcome back.
How are you?
Doing pretty well, A little muggy here in DC, but thank goodness, Enrique, for air conditioning. It's really a lifesaver, at least for people like me. So your stock indirectly supplies air conditioning and power, I guess, for many of the things that make modern life modern. Its name is Talen Energy, ticker is TLN. Can you give us the 30-second summary in a nutshell first?
Yeah, so Talen is what's called an independent power producer. They own generation assets. So they own electricity generation assets. Their primary asset is they own the 6th largest nuclear power plant in America, which is called Susquehanna, based in Pennsylvania. And I'm just going to give you one more piece of this. An independent power producer means that they are allowed to sell their power to anyone. So there are many utilities that are regulated, like Southern, which is in Georgia, that owns a bunch of generation, just built a giant nuke. They use it only for their rate base. So they if power prices go up a lot or power prices go down a lot, they're still supplying power to their rate base. This is an independent power producer. They can sell their power to anyone, and they own the 6th largest nuclear plant in the United States.
And so for someone just beamed into this, not yet familiar with this space, utilities are highly regulated. They have, because they're natural monopolies, they have a little window that they can make money in, set basically by regulators. They have a base of customers. They buy power. The regulators have learned over the years, like in California, you can't let your utility go bankrupt. Well, you can let it go bankrupt, but it's a bad thing.
Right.
IPPs, though, are a totally different beast. They sort of live or die by their rate, by their power spread price, right?
Yeah. So, I mean, what you said, let's use the word utility. Utilities consist of 3 components. There is power generation, could be nuclear, could be gas, could be coal, could be solar, could be hydroelectric, etc. There is then what's called transmission, which is the big pipes that go from the generation to your house, and then that is distribution. That's your street corner, okay? So what happens is the transmission and distribution businesses don't lend themselves to competition. It doesn't make sense to build 2 electric pipes to your house, or necessarily to build multiple electric pipes, going down the freeway. But the generation, because we have this giant web, does lend itself to competition. So through time, in the last 30 years, what's happened is, and I don't know if it's a majority, but a very large portion of the generation footprint in this country is now independent to be able to sell wherever, while the transmission and distribution infrastructure remains highly regulated, again, because it doesn't make economic sense to build 2 of those.
So I know that Talen, Enrique, was spun off, I believe, from Pennsylvania Power and Light, PPL.
Yep.
Do they still have ownership in this company, or is it totally separate?
Talen, so the story goes, PPL, Pennsylvania Power and Light, spun off their generation assets, I want to say in 2015 or 2016. They merged it with the generation assets of a privately owned company that was owned by a private equity shop. And what those guys did, which is what private equity shops do, they went in and said, okay, we're going to generate this much EBITDA based on, or profitability based on what we see power prices doing. And they layered on a ton of debt. So they were going to get a very high equity return, because they said, we've got a small sliver of equity. And then if we pay off all this debt, what will happen is we deliver these profits, we're going to generate a very high return. The problem that Talen ran into was from the period 2015 right into 2020, when we went into COVID, the country was relatively oversupplied with power. So power prices plummeted. And because of the debt load, the company went bankrupt. So that's a very important distinction. Utilities never, ever go bankrupt because of the operating business being losing money. Utilities always make money, but they go bankrupt for one of two things. One, which you're familiar with, which you were referencing before, like Pacific Gas and Electric, big lawsuits, Hawaiian Electric, a whole bunch of that. Or number two, if there's too much debt and they go through a power cycle or something like that, they could go bankrupt. So the company went bankrupt about 2 years ago, came out of bankruptcy last May, and just recently uplisted the shares literally like at the beginning of this month. So it's Nasdaq listed right now, and they cleaned up the balance sheet. And look, I'll continue the story. When it came out of bankruptcy, they owned these generation assets. They owned generations assets in what's called PJM, which is Pennsylvania, New Jersey, Maryland. It actually includes like 7 or 8 states, sort of that.
And that's the largest interconnected grid in the U.S., right? I believe.
I think so. Yeah. It's I don't know that it's the largest by geography, but the largest by interconnections, because there's a little bit of a difference, right? Because the second one that they owned generation assets in ERCOT, which is the Texas grid, which I think is the largest grid. So they owned generation in PJM and ERCOT. And then they owned a whole bunch of random stuff. They actually had a lawsuit with PPL. They had a data center that they had built on premise with the nuke, and all these different pieces. In the last 3-4 months, they've completely cleaned it up. So today they simply own the PJM assets, of which 30-40% of the generation and 70% of their profits come from the single big nuke. So what they did, they settled the lawsuit with PPL, they sold the ERCOT assets, and then this one's the final one, which is really important, and this will get to why the stock, we recommended it in February at 65, and 7 days ago it was trading at 135. Today it's trading at 106, and we'll talk about all of that. The reason the stock had doubled, and even more from the beginning of the year, it was trading at 65 at the start of the year. The reason the stock had doubled is, I'll give a bigger picture, but I'll talk about something small. They had taken their data center business, and Amazon came in and bought the data center business. They had put in about $300 million. Amazon paid them about $600 million. But importantly, Amazon agreed to expand that data center business by about 1/3 or 1/3 to 2/3, but also buy power at, I want to say, $65 or $75 a megawatt hour. Right now, power in PJM is going for $45 a megawatt hour. So why does Amazon come in and pay double what they paid for the data center and go out and say, I'm going to pay you 1.65 times where power prices are going right now? The reason is we are on the verge of an incredible power crisis, okay? We're about to see. And so people talk with AI, I say that there was this Chat GPT moment, right? When was the first time you got on Chat GPT or heard about it? And all of a sudden, you'd heard about AI, but you went on and did a query and got it spit back to you, and all of a sudden it was a part of your life. Well, the power crisis, and I don't know if it's going to be this summer or next summer, but sometime in the next 24 months is going to be a part of your life. And the reason is, everyone who's watching this, your power is going to go out, okay? It won't, maybe not everyone, but a lot of us. And the challenge is this, is that there are high barriers to entry of supply. What are the barriers to entry to supply? Well, they're mostly regulatory and political. The first one is that in this country, with the environmental movement, and this is not a political statement, this is a statement of fact, we can't build any more coal plants, and even natural gas plants, which burn quite efficiently, we're not really able to build. So in New York, for instance, the green movement went out and closed a nuclear plant called Indian Point, just about 60 to 90 miles up the river from New York City. They closed it because they felt it was a threat post 9/11. And then the plan was that New York City was then going to build gas plants. They were able to actually get approval for the gas plants, but then the green movement blocked the pipelines, so you couldn't get the gas into New York City. So what's happening now, New York City power prices have doubled, and they're burning more coal energy than they ever have before, because the only way they could actually get power was through these coal assets. So you kind of, I use that example to explain that aspect of it. The other issue is there's a very large NIMBY, not in my backyard. No one wants to have a power plant built next to them. Third issue is that the power that is being built, people seem to be for solar and wind and all that. Now, those are getting some NIMBY pushback, but the other thing is those are intermittent power sources. So if it's not sunny, you don't have any solar. If it's not windy, you don't have any wind. And after you actually take the cost of the batteries, those power, because you'll see a lot of people say, oh, solar and wind are now more economic than gas. Well, but gas doesn't need a battery, and those do. So if you put the batteries in, it isn't economic. We're not bringing on supply. There's all these barriers. If you wanted to build a new nuke, and this is important, because now I think what we've seen is there's been a political change that nuclear is approved by both sides. Southern and Company just finished a nuke down in Georgia. Okay. That was originally supposed to cost them, I want to say 15 billion, and cost them like 28, and was supposed to take like 8 years and took them 18. We're going to come back to that in a second, because that nuke is about the same size as the one Susquehanna owns. So on one side, you've got very constrained supply growth, if not no supply growth. On the other, you have demand. And there are four things happening with demand. Number one, through time, just economic growth and population growth and all those. Those are very, very natural. Number two, though, is the reindustrialization of America. This was actually happening before the Inflation Reduction Act, the aptly named Inflation Reduction Act, but now has been a trend for the last 5-6 years. I was actually just looking at a data set from Bespoke saying we are in the single biggest spike in factory construction in the United States going back 100 years. So as we bring industries onshore, which everyone's a big fan of, guess what? Those industries need a lot of power. So that's number one. Number two, electric vehicles. So regardless of whether you think all cars are going to be electric or whatever percentage, the fact is there's a lot more electric vehicles today than there were. And as much as you say, well, they're not burning gas, well, they still need to get power somewhere. They need electricity. So they need to get the electricity. The third one is AI. And this gets back to what Amazon did. An AI query takes up to or beyond 10 times more power than a Google query. Okay. That's why it's so good, right? Because if you actually think about AI versus Google, Google, you go in and say, top restaurants, New York City, AI, you go in and you say, well, I'm going to spend a weekend in New York. What are restaurants and hotels, et cetera, I should go to? It's like 100 Google queries put into one. So as we get these confluxes, what happens is power prices, when they go up, they're highly inelastic. Okay, the power demand. Okay, it's not like all of a sudden power prices go up a ton, and we say we're just going to turn off all the lights, or we're going to turn off all the air conditioners, or these factories are going to stop running. So when you see power prices move, it's not that all of a sudden power prices are at 45 and then they go to 50 and they go to 55 and the demand comes off and the curve balances. Power prices go from 45 to 145. And so back in the early to mid 2000s, we saw a power cycle. We saw something similar. What happened was the first wave of data centers. We saw a lot of industrial manufacturing. There wasn't these same sort of factors. And we saw, and I use PPL as an example, because these are the same assets, right, that PPL owned. If you go back to what PPL did, I'm just going to look here, and we've been trading utilities for over 30 years. PPL from June of 2000 was at $10, and by March of, let's actually do this. Let's take 03. 03, it bottomed at $15. And went as high as $55 by March of 08. That's because power prices went up. What we are, Talen is a much cleaner PPL. It didn't have any of the distribution, any of the transmission, any of the regulated assets. And I think that the power crisis that we're about to see is going to dwarf anything else. And let me finish off with these couple points. Amazon went in and bought those power, the data center there. Yep. What the hyperscalers understand is they're going to get enough chips Okay. NVIDIA will build more chips. AMD will make chips. Intel will make chips. NVIDIA ain't making nukes, okay? So the challenge for hyperscalers is actually going to be, do you have enough power to power this always on? Because remember, the internet and AI is not intermittent. It can't wait until the sun is shining or until it's windy to run. It needs to run 24/7. So what Amazon doing is they're securing power. And there was a rumor I had heard that since has been confirmed that Microsoft actually it turned out that it was Amazon that was what ended up hitting the tape. I had actually heard Microsoft had gone to the leader in the industry, Constellation, and offered to buy up 50% of their capacity for the next 30 years at like a 50 to 75% premium. And Constellation ultimately didn't do the deal for various reasons. But so, you know, where we're at, let's just make it very, very simple. We've got a supply curve that it has limited growth and that won't respond quickly. And we've got a demand curve that's accelerating, and you've got inelastic demand, which means power prices can go through the roof. So with Talen, I'm going to give you some quick data, okay? The company right now has an enterprise value. This is based on the stock getting absolutely creamed today, and we'll talk about what's going on with the stock and the IPPs here the last couple of days. So the stock has a market capitalization or has an enterprise value of about $7 billion. They have said they'll do $750 million of EBITDA. By the way, that number's locked in. Like it's locked in. They know it, like 95% locked in. If the stock, that puts it at 9.5 times EV to EBITDA. Constellation, which is the leader in the industry, right now, even after Constellation has also been hit some 20%, and we would buy all these stocks. There's 3 big IPPs. Constellation is the largest by market cap, is the largest nuclear provider. That's ticker CEG. Well, I would back up the truck. It's literally the fact that you have me today. I would take, if you've got long-term money, I'd take 10, 20% of your portfolio and buy these 3 stocks. The second one is Vistra, ticker VST. Which has the largest generation portfolio, and this one, Talen, which we like the most, which happens to be down 12% today, we're going to talk about. But Constellation trades at 15 times EV to EBITDA. If you put Talen at 15 times EV to EBITDA, you get the stock at 176. Okay, the stock is at 105. There was another company called ENGH, was the ticker, that was sold for 11 times EV to EBITDA. If you put that on it, you get $125 a share, which is up 20% from here. And I'm going to give you 2 more pieces. The plant cost $8 billion to build in 1970, like in the late 1970s. Those were 1970s dollars. Southern just built the same plant and spent $25 or $26 billion on it. If I put $25 or $26 billion on this company, I'm talking about $250 a share. The final piece is if you then go in and said, what if the prices that Amazon are paying are the actual prices where it'll be? It works out to about 1.15 billion. And you can calculate all these numbers of EBITDA. And I put the Constellation multiple on it, you've got a $278 stock. So like every single scenario is, I mean, minimum 20% up from here, which is where the stock was 6 days ago. And many of them are the stock a double or a triple. So why the hell is the stock down 12% today? And why is the stock down now? I'm just looking. The stock hit an all-time high on July 16th at 134. Okay, 9 days ago. So what's happening? Okay, this is where it gets a little technical. There has been no news of any sort, no changes in power prices, no announcements from anyone, etc. But what's happened is if you look through the first half of the year, Vistra and Constellation, which are part of the Russell 1000, the 1,000 largest stocks. Vistra was the second best performing stock right after NVIDIA, and Constellation was the 10th best performing stock. So a lot of investors, I think, don't really spend a lot of time thinking about technicals or why stocks go up or down in the short term, but this is how we would explain it. What happens is you get a narrative. The narrative for Vistra, Constellation, and Talen was that we're entering into this power crisis. They have high exposure to it. Numbers are going up. Numbers have been going up. And as the narrative becomes more well-known, it attracts more demand from buyers. Those buyers then, because they accumulate the stock, create a great-looking chart. If you look at Talen went through the 50-day moving average on November 28th. Talen briefly touched that 50-day moving average in late June, but hadn't been within a whisper of the 50-day moving average basically for 8-9 months. Vistra's the same, Constellation's the same. So a good narrative attracts buyers. Buyers create a good chart, if not a great chart. That then attracts buyers who aren't interested in the narrative. They're interested in the great chart. And the longer the chart stays spectacular, the second and 10th best performing stocks. And by the way, had Talen been in the Russell 1000, it would have been in that top 10 as well. The longer stocks stay extended, and in that period, they attract more and more chart buyers. But what happens to chart buyers? Well, they're buying because it has a great chart. As soon as it doesn't have a great chart, you know what they do? They sell. And they don't care about their narrative. They're not looking at price. So that's where you're saying this is a lot of what's happening across the board and a lot of the winners right now. So we by the way, had been selling stocks. We put out a note last Monday that we said time to take profits. We took down our trading books from like 16 positions to like 4, okay? Because we had a sense that it just had gotten overdone. We've been steadily buying across the last week because when you have a 10-month uptrend with no breaks, most likely when you get into a real correction, it's not going to be pretty. And that's exactly what's happened with Talen. I'll tell you this. Talen on Tuesday was at 126. Today, the stock is at 106. Not a single thing happened. The only thing I'll say that's happened, and I will say this is underneath, Constellation and Vistra had already corrected. So Constellation was down, 15, 20%. That's the most liquid from the beginning of the month. Vistra was down 30%. If you go back to the high, that was about a month ago, or 2 months ago. So I think that Talen's just catching up. And I'll give you this one last part. The other element, so we start with a narrative, creates buyers, creates a great chart. We then get chart buyers who take over, who combine with the narrative buyers. As soon as the chart turns not great, the chart buyers become chart sellers, and then people begin to question the narrative. The other thing that I've heard, and I know, I guarantee this is true, is people talk about the pods. These are the highly risk-managed books that sit at Citadel, Millennium, etc. They run very, very low net. And what the pods do by their very nature, they're momentum-oriented, is if things are working, Izzy and Ken Griffin, or his team, his team who started that business, actually used to be investors of mine. They ran Deutsche Bank's fund of funds business. They go in and say, well, gosh, you're making a lot of money. I'm going to give you more capital, and I'm going to give you more capital. And so when you see these IPP books at the pods, they were just crushing it. They never had any corrections. So they got more and more capital throughout the last 6-12 months. Now what happens, though, what comes with that is those books say, well, you were managing 100 million. Now I'm going to give you 500 million. But my stop loss never changes. It's down 10%. So when the stop loss gets hit, you liquidate that pod book and it goes from 500 million to 100 million. So when you look at these charts, look at, again, any of these charts, KEG, Vistra, and now Talen, it looks like they hit wind shear. I don't know if you know what happens with the wind shear. It's literally a plane like drops, 600 feet. I had it happen to me once. I'm scared shitless to fly for the next 2 years. That's what's happening in these stocks. And look, nothing's changed. This is why you sell 2 weeks ago, is so that you can buy today. So I honestly, Talen is probably the single best idea I've had in the last 5 years. And this might be the best buying opportunity to buy the stock that I've had since I've had the idea. Only because when we were buying it at 60, we had all these things that needed to happen. Now all those things need to have happened, and we've had the stock pull back. I'll give you this one last thing. I don't think Talen's going to be a publicly traded company within 6 to 18 months. The reason is Constellation or Vistra or NRG or Amazon or Microsoft are going to come in and buy Talen and basically bring it in. It would be a highly accretive transaction. So that's, it's pretty crazy out there, but that's the overview of what's going on.
That is a powerful testimony, Enrique. Peter Lynch said, never invest in an idea you can't illustrate with a crayon. So if I'm understanding correctly, the crayon version, or maybe the colored pencil version, would be first for all IPPs. Generally, we didn't have power growth too much for the past 20, 30 years in the US. Now, in fact, we had negative power growth for the past 10 years. Now, suddenly with EVs, with resurgence of manufacturing, and with AI, we have really meaningful power growth. So that's a boon for everybody. These guys are more nimble than the utilities, and they obviously are a bit of an AI play for.
It's not that they're more nimble; it's that they own untethered generation. No one's going to. Supply is not nimble for anyone. It's just the supply that exists at the regulated utilities is taken. The IPPs own supply that's available. So as we get acceleration in demand and no increases in supply, prices go asymptotic. The people that benefit are the people that have untethered, uncommitted power, which are the IPPs.
The non-nimbleness is actually the selling point, in effect, that no one's going to build a nuclear plant very quickly. It's going to take forever and $1 bazillion to do that. So if you have one, go ahead.
Yeah, well, so let me make one last point. I can buy all of Talen at $7 billion today. So why the hell would I build a nuclear plant for $26 billion when I could go offer $150 a share for Talen? And by the way, so let's just go at $150, the stock, it's $10 billion. So I could pay a 50% premium for this stock and buy a nuclear plant at a third of what the replacement value is. And the numbers, Susquehanna is one of the top performing nuclear plants in the country. So this to me, but again, it came out of bankruptcy. It just got uplisted. That's the other thing that's happening here. The reason why Talen's down so much today is it's not as it's closely held, but I think you have a lot of unsophisticated buyers that have been buying the chart without really understanding the story. And that's where you get a puke like you do today.
Yeah, that's my question. I mean, first of all, buying Talen versus building a new nuke, it's a lot less risky to buy an existing business. Well, it's tremendously risky. You could go halfway through to your new nuke and get canceled for some reason, right? And
the best case, the new nuke is going to take you a dozen years. I could have a Talen acquisition closed in 12 months. So this is the disconnect between the public and the private markets here is massive. It's just like as big as I've ever seen. In the market.
So what's the floor here? And I get the idea that pod shops, the momentum buyers pile on once they see this going up. It would seem like part of those and maybe a related group of buyers are just kind of picks and shovels AI buyers. They bought NVIDIA, they bought the chips. They said, what else can we buy? Oh, let's buy some IPPs.
Yeah.
Okay. And so then NVIDIA, the AI theme has crested, or at least for right now, it seems to have crested. They're coming down.
Let me say one thing there too, because this is very important. And again, I feel like many, if not most investors focus a lot on the fundamental and the long-term stories, but they don't spend time understanding momentum stocks. Here's the deal with momentum stocks. Strength begets strength. The more they go up, the more they go up. But if they're not going up, they're going down. Okay. This is what I was saying. It went from narrative to chart, but if the chart stops going up, it doesn't go sideways, it goes down. That's what's happened to NVIDIA. That's what happened to all these things that went parabolic. That's why when they go parabolic, they end up coming down. What happens is there's two elements to think of. There's price and time, okay? What I'll tell you is this, is we just traded, in the last 2 days, we just traded 4 million shares, okay? This is on a stock that on average trades prior to this period, trades, 400, 500,000 shares. We just traded 8 days worth of stock. So number one, I'll tell you, we're a lot more cleaned up right now. Number two, the company just bought back $1 billion worth of stock at 116 2 weeks ago. 2 weeks ago. So that's bad because they don't have the $1 billion to go buy more stock at 116, but they still have capacity on the balance sheet. I wouldn't be surprised if they go out and buy back some more stock. So, how low can it go? There's no limit because the pod book is de-risking. It could go to 100, it could go to 90, it could go to 80. Any of those numbers make sense. But as long as the narrative isn't broken, and when I say narrative, I want to make an important distinction here. I'm not saying a false narrative. I'm not saying a story that isn't true. I'm saying a story that is true because, and this goes for NVIDIA as well, if we start seeing negative earnings revisions at NVIDIA or positive earnings revisions stop, NVIDIA stock's going to go down, and it's going to go down a lot. So the limit to when companies have negative revisions, how low the stock can go is infinity. I mean, it's like, because the earnings are going down. The exact opposite is happening here. So, I look at it more as price and time. If you don't have a position in these, absolutely do a position today. I would say, so to me, I think these will bounce very, very quickly. I think you've got 2 to 4 weeks, and I'll be very surprised if within 6 to 8 weeks, we are not back to close to the highs by the time, and by year end, I think we're going to be back at those highs or further. So again, on Talen, let's just do the math. I haven't done this yet. On Talen, which has been rallying while we've been talking here, that's a 26% move. On Vistra, this one's incredible. On Vistra, that would actually be a 53% move. And even on Constellation, which is the blue chip, so to speak, 1, 236. It's a 38% move. So, and again, they're not missing numbers. Their numbers are locked in. So this is an incredible buying. I'll say one last thing. Back in March of 2020, my partner Whitney Tilson and I did a special podcast, okay, where we were like, you got to buy stocks here. You got to buy. It was the COVID bottom. The market bottomed within 3 days. And we got the question that you just asked. People were like, well, when's it going to stop? And we said, I don't know. Okay. Everyone's just selling. Everyone's panicked, but the world ain't ending. There's a dozen stocks, and we put out 8 stocks to buy. We nailed the COVID bottom. Meaning that I didn't know. It went down for another 2-3 days. Actually, maybe it was like 2 days or something like that. This is exactly the same way I feel about these IPPs right now. Could they go down another day? Could they go down another 3? Could they go down another 6? Could they go down another 5, another 20, another 30? Sure. But I'll tell you something, 6-8 weeks, year end, they're going to be a hell of a lot higher than they are right now.
Strong words. So it sounds like one risk is the momentum price. The other risk, somebody just jumping into this might probably find, if they read some article about IPPs, would be power price risk. But your argument would be, first of all, most of that pricing is locked in the meantime with these contracts. After that, it's unlikely to be a real risk because we've got so much demand growth.
Exactly.
We don't have a good probability of prices declining.
If you said to me, let's actually, this is topical. If you told me we're going into a horrible recession tomorrow, and you told me that all the hyperscalers were cutting their investments by half or 2/3, well, I still probably couldn't get there, but I'd say, okay, well, now I can see where you're coming from. Do you know what 2 data points we got in the last 24 hours? GDP exceeded expectations, and Google sold off because they're spending more money. So again, the one fundamental thesis that I could buy into is a recession and big cutbacks on spending. And in the last 24 hours, we've literally seen the opposite data points. It's just, I've been doing this for 30 years. You get these, they just get handed to you on a silver platter, and you got to step up. And it's scary. When you look at these charts, no one wants to do it. And that's when we love it. This market, I was bored 3 weeks ago. We were making tons of money. I was bored. I almost didn't have ideas because I'm like, okay, everything's extended. I've got ideas coming out of the woodworks right now. This is the time to be active and take advantage.
I don't have a position in Talen, but you may have sold me, Enrique. I'm quite tempted by that. Very, very strong endorsement. So it's been a great chat with you here. Like I said, Talen, Vistra, Constellation. It sounds like you like them all. You like Talen the most, but there's nothing wrong with buying a whole lot of them. If someone wants to find out more about you on the internet, HX Daily.
Yeah, daily.hxresearch.net. And you can also look me up on Twitter, Enrique Abeyta. And if you just Google my name, Enrique Abeyta, Abeyta, we've got full socials. You'll get all of our sites. My LinkedIn has my whole career and everything. So you can look at anything. We're very vocal. And by the way, Talen, we don't put free ideas out there very often. We usually only have 1 to 3 free ideas out there. Talen is actually the free idea that we've published. And we published it for paid readers. They got Talen at 60. For free readers, we actually put Talen out there, I want to say at like 85 or 90. So even with the pullback, people who bought Talen on our recommendation are up a very nice amount.
Very nice. Awesome. Well, we'll put those links below in the show notes and maybe flash a few on the screen as well. Enrique, thanks as always for sharing your idea here. This is a great one too, just like NVIDIA call options. And thanks to you guys as always for watching us at home.